Okay, here we are with the Spread Hunter for November 1st, and I'm going to follow up with a small recap of yesterday's recording, where we talked about the 57.5, 59.5 spread in the SPYs, and the 57.5 calls, and the 58 calls. And here we're going to look at what happened from yesterday's close till today's close. The 57.5 calls, as you can see here, closed at 64 cents. Yesterday that was a 54-cent option. So with the SPY going up really only 14 cents, I think. No, 20 cents for the day. That option gained a dime because it's right at the strike. The spread, which we see here at 56, gained 7 cents. So it's illustrative because you can see how the risk-reward gets factored into buying a spread versus buying an option just outright long. You would have risked $54 on this, whereas if you had bought the spread, you would have risked $49. It's not a huge difference, and I think I said yesterday, for my money, I would just go with the outright long. And if you had done that, you would be up a dime for today. The 58 calls we also talked about, and those were 34 cents yesterday, and they're now 40. So you'd be up 6 cents on those. So, you can play with that information and make decisions based on what happened. I think, if I'm not mistaken, the SPYs had a bigger range today. They traded up to 58.5, which is a full point higher than where they closed. A little bit more than that, actually. So if that was the case, you could see that this 57.5, 59.5 spread would have looked a little bit more like this spread, the 56.5, 58.5 spread at its peak today. But it didn't hold that peak. It sold off. It closed up 20 cents, and what you got was a 7-cent gain on the spread and a 10-cent gain on the option. I imagine this 57.5 call would have looked a little bit more like the 56.5 call when you were a full point higher, which makes sense because the underlying would have been $1 higher. So this option would have been almost twice what it was. And had you had a sell offer in to sell this thing at anywhere near $1, or a little under $1, a little over $1, you would have made a very, very good trade. So that's a recap of yesterday. I also wanted to show you the calendar spread functionality in Spread Hunter, and you can see here that this is the way the calendar spreads lay out, and you can see for the 57.5 strike here that this spread expired today because the 11 ones are gone, and all you're left is naked long. If you had had this calendar on, you would be naked long the 11 threes, which is the 64-cent option that you see over here, which was much higher at one point today. You can also see in the calendar matrix, you can see that the same spread next week, which will be actually this coming Friday to next Wednesday, the 8th, will be 36 cents starting tomorrow. And then if you wanted to do the 8th versus the 11th, the spread would, the 8th versus the 10th, the spread is 20 cents. And you can also see up here the longer ones, which is the 1st versus the 8th. That went out for $1. And if you were interested in buying the 3rd versus the 10th, that spread is 56 cents, and could very well end up like this dollar spread if we go through the next couple of days with not a lot of movement in the SPY. So that's a lot to take in for the day, and I'm just going to cap it there. So I will talk to you tomorrow night. Good night.